sort of, maybe they weave into your career, maybe they don't. I'm very lucky that some of my passions have weaved into my career, but I've done a number of things. I've helped start a theater company. I've been in an opera. I play Australian football and have been a club sports administrator. I've done youth mentoring stuff. So any number of things, any number of things can be interesting to me in any season, and I tend to give it at least one try. And so, if nothing else, I learn a lot of lessons from those things, and they each kind of give me a nugget of wisdom for the work that I do. So that's a little bit about me, but I think I'd like to get to know all of you who are on the call as well. So maybe we can do some of that.
Sounds great. So I think that's exactly what we want to do today. We have a lot of students join from both colleges. So why don't we, take some time to introduce ourselves to each other and get to know each other. So I think we could do a quick introduction with name, school, year, what year you are, and maybe a quick fun thing about you, your hobby, what you pick up during this COVID time for fun. So maybe I can start. My name is In-kyung. I work for New York Life. I've been with the company more than decades. And the fun thing that I pick up during the COVID is many people, is cooking. I make my meals more often than before. That's one thing that I picked up. I'm going with the names that I see here. I'll go with Jody.
Hi, everyone. I'm Jody Gay-Facey. I've been with New York Life for 2 years now, and something I've picked up during the quarantine time is I've been reading books from my childhood days. So I've been reading Archie comics.
That sounds really fun. Okay, I'm going to Anha.
Hi,
You're welcome to turn on the video. Yes.
Okay. Hi, my name is Anaha. I'm from St. John's University. I'm currently a junior, and over quarantine, I try to stay off technology. I guess that's one of my hobbies now. I kind of just like to go out, take a walk, and I definitely like cooking too.
Sounds wonderful. We all need some time off the screen. Oh, I see Cheryl from New York Life. Cheryl, would you like to go?
Sure, I'm Cheryl Eng. I work with the Baruch Ambassador Program. And similar to In-kyung, I've been doing specifically a lot of baking, but then also had to take up running to sort of counteract all of that.
Perfect. All right, next, David Foster.
All right, hi everyone. My name is David Foster. I am a junior actuarial science major at St. John's University. I haven't really done anything too new during the pandemic. I've been listening to a lot of music. I also help out and distribute food to those in need whenever I can. We do it every month, so that's an opportunity that's opened up because of the pandemic. So that's all I have to say about myself.
That's beautiful. Thanks for sharing. Next, I'll move to Despina.
Hi, my name is Despina Skartados. I'm a junior at Baruch, majoring in mathematics. And one of the hobbies that I picked up over quarantine is also cooking and baking.
Wonderful. Drew.
Hello, my name is Drew. I go to Georgia State. I'm a junior majoring in risk management and insurance. And a hobby of mine would be skateboarding.
Nice. Okay, so going to Gerardo.
Hello. Can you guys hear me? Yeah.
Yes.
So, my name is Gerardo Betancourt. I attend Georgia State University, and something that I picked up during the pandemic was I started exercising on a constant basis again, and I also started taking courses that I was interested in before the pandemic, but now I had more time, so I started doing that in my free time.
Perfect. Okay, Cusco.
So I was doing the project. Hi everyone, I'm Cusco, and I'm currently a junior entering my senior year. I'm graduating May 22. One thing in during the 19 is weight, only weight. I'm kidding. I picked up I doing keyboard, and right now I know how to play some songs. That's what really I did during the.
Nice. Nice. Now you're more musical.
A little bit.
Yeah. Okay, Kyra.
Hi everyone, I am a third year student at St. John's. I'm currently majoring in actuarial science and double minoring in finance and cybersecurity. One hobby or something that I did over quarantine working out. I don't know if it's a hobby or a health thing.
Oh yes, it is. Hobby and place working out. Yes.
Yeah, I also recently switched up my diet and started cooking healthy.
Nice. All right, Lawrence.
Hi, sorry. My name is Anthony. I am a senior at St. John's, so a little under 1 month until I graduate, thank God. One thing that I've picked up, I wouldn't say anything really. I've just been the same ever since, I guess. Yeah.
All right. Okay, sounds good. Lee Min.
Yeah, hi everyone. My name is Min Lee. Yeah, I'm a senior at Georgia State University. I double major in actuarial science and finance, and minor in computer information system. For one of my hobby during the pandemic was I have more time to play violin, which I don't usually have time before. Yeah.
Nice to pick up all the things. Yes. All right, Liam.
Hello, everyone. My name is Liam Benjamin. I'm a senior at St. John's University. And over the quarantine, I mean, I've been cooking and baking a lot, but that doesn't seem to be like a unique thing here. Seems like a lot of people have been doing that. I've also been reading a lot more books recently, especially since I guess the actuarial coursework doesn't really permit me to read books for my first 3 years. But over the last couple of months, I've been able to have a bit more time to read. So that's what I've been doing.
Nice. All right, so I'm gonna move to Michael. Michael S.
Hello, my name is Michael. I'm with Baruch College. I'm in my junior year. I'm studying actuarial science, and one hobby, I guess, I picked up, I don't know if it's really a hobby, is I got more time to spend it with friends and family, especially over Zoom.
Yes, of course. All right, nice to meet you. Nicole.
Hi everyone, my name is Nicole and I'm a second year student at Georgia State. And one hobby I picked up during quarantine was definitely reading more and exercising. So,
Nice. Omu.
Hi, my name is Umu. I am a junior at St. Joseph's University and I'm studying risk management and insurance. And during the quarantine, I think the only hobby that I've taken was like coding, like just learning how to code. So
Nice. Nice to meet you. Shikaina?
Hi everyone, my name is Shekinah Williams. I go to Georgia State. I'm a junior, and I guess one of my hobbies, I wish it was cooking like everybody else, but it's not. I think one of my hobbies that I picked up during quarantine was like painting, and I actually sold some of the paintings, so I ended up making some money over quarantine.
Wow. That's nice. All right. Moving on, Shujen. I'm sorry.
Yeah, you get it right. Hi everyone, I'm Sujin. I'm a junior at Brew College, majoring in actuarial science. During quarantine, I pick up the violin and start learning as an adult.
Nice. A lot of people are picking up instruments. That's nice. Victoria?
Hi everybody, my name is Victoria Pommels. I'm currently a junior studying actuarial science at Georgia State University. Well, a hobby, I guess, that I've taken up since my mom's home. She gets really bored really easily, so she cooks a lot. And so I'm not really the one cooking, I'm more the one eating. And so I don't know if I can call that a hobby, but I've definitely been eating a lot. And also since my grandma and I have both gotten vaccinated, so we go on a lot of walks every now and then. So that's been a lot of fun too.
There's a good balance there too. All right, so Jessie.
Hi everyone, my name is Jessie and I'm a sophomore major in actuarial science at Baruch College. One hobby I picked up during my quarantine time, I think, is I start following the videos on YouTube and try to do some exercise at home. So I think just trying to do some gym. Yeah.
Nice. Shi Cheong Liu.
Hello everyone, my name is Xiu Chang. I'm right now a junior majoring in actual science in Baruch. During the quarantine, I got a tank of baby goldfish. So right now, most of my time, like taking my baby goldfish.
Yes, that's fun. I know. The last, Amy.
Hi, my name is Amy. I'm in my first year of master's degree in Georgia State University. During quarantine, I started doing yoga.
Nice. That really helps. So welcome everyone. It's really nice to see your faces and hear your voices. Now I'm going to hand it over to Nana.
All right, realized I was on mute and trying to talk. Pleasure to meet all of you and learn some of the hobbies that you're going through or that you've picked up during the pandemic. So what I want to do today is give a really kind of high-level overview of microinsurance. Some of you may be familiar with the concept, others may not be familiar. Some of you, if you've been around IABA for a while, may have seen me give this presentation at the 2018 annual meeting. Some of you may have not. I know my name and title say Principal Financial Group, as mentioned. That's the company that I work for. But I've got friends at the Microinsurance Center at Milliman, and also friends who are actuaries at Milliman that are involved or try to get connected with the microinsurance practice. And so I actually gave this presentation with an actuary named Mitchell Momani, who is a health actuary at Milliman, but also did a 3-month period, or I think 6-month period, something like that, working specifically with the microinsurance practice. And so that's why this has the Microinsurance Center at Milliman branding on it. So really want to talk about at a high level what it is, why it's relevant, and what the opportunities for actuaries are in the space. Next slide. So what microinsurance is, often I think there's some different words or different thoughts that can come to mind when people use the word microinsurance. So sometimes folks are referring to the size of the coverage that's being offered. Sometimes folks are referring to the type of coverage that's being offered. So it might be, coverage for a day's worth of events. If you are, let's say, tightrope walking, you can buy insurance for that day or that hour's worth of tightrope walking, right? The period of coverage. So people might be referring to products that cover a very short period of time, whether it's a month, 3 months, 6 months, whatever that is. And then also the cost of coverage. So is it something that has a relatively low premium? Specifically in this presentation, I think we're going to be talking about potentially some combination of all of these things, but really what we're talking about are insurance products that are specifically designed to meet the needs of low-income consumers with respect to the circumstances of their lives, the cost of the product, and how that sort of interacts or shows up with respect to their financial lives, the structure of the products, and the method of delivery. And so what the microinsurance sector has really moved to sort of calling this as inclusive insurance, to more broadly and I would say kind of specifically address what we're trying to talk about here, which is really insurance products that can better meet the needs of a segment of the market that tends to be less attended to, if you will, by the formal financial services sector. We can go to the next slide. So I believe this estimate came from the global microinsurance landscape study from 2016. A new one's been published for 2020, and I haven't read it, but I wouldn't say that this estimate is, grossly off from where it was a few years ago. But that report would have estimated the market at about 3 billion people. And so really what we're looking at is, in terms of traditional insurance products, folks that are wealthy, folks that you would consider non-poor, those are going to be the targets of some of the products that we might see in markets like the United States. So things like your $1 million term policies or $500,000, $1 million universal life policy, that may or may not have some guarantees, or variable life insurance policies or index life insurance policies. Those are things that you're going to see in relatively sophisticated markets with consumers that you would consider at minimum non-poor, right? They've got a decent amount of discretionary income. Maybe they have assets to protect. They may have relatively complex financial lives. And so insurance, while you have relatively simple products like, term insurance products, you can have more complicated products that are used to meet needs even like estate planning or things like that. Then the sort of next tier of folks is really where the microinsurance market focuses. And so it's really the moderate poor and what you would call the vulnerable non-poor. And so, the vulnerable non-poor are folks that with some event, could become poor, could struggle to meet basic needs, could struggle to meet obligations that they have to their families or things like that, whether it's, the loss of income, whether it's the illness of a family member, whether it's some event that they need to attend to or contribute money to. These are events that can sort of make people's financial lives go from sort of unstable to, ooh, this is tough and I'm not sure how we're going to get out of this. And so that market, as well as folks you would consider moderately poor, would really be that market for microinsurance. And as mentioned, that market is estimated to be about 3 billion people. And then you have sort of the call it the lowest sector with respect to whether you want to call it wealth or income or economic status. That's really where government programs and philanthropy come into play, because it's very difficult to find sustainable solutions where the economics of an actual product work. And so that's where we're really relying on social safety nets, philanthropy, to find ways to support that segment of the population. Also, by the way, if folks have questions, I'm not sure how the raise hand function works on Zoom, but please feel free to throw them in the chat. And I will try to take a look and address them as they come up. We can go to the next slide. So thinking about the market segments that we just talked about, I kind of want to go through what you all think some of the risks might be for folks in some of these different demographics or different segments. And we're going to use these in a few slides down the road, but just feel free to unmute and kind of name them. And if we could have someone take notes, I don't know who, maybe more than one of you want to take notes, but would be curious if we were to say someone is wealthy, right? What do we think their financial interests might be, and what kind of risks do we think they might face in their lives? Maybe looking for 2 or 3 examples.
The risks that they would face would be on a much, I would say, larger scale in terms of quantity and yeah, I was actually larger in terms of quantity because you're dealing with, potentially millionaires and billionaires. So, whether a recession hits or a depression hits, if they're investing in stocks, their portfolios might take hits. So there's a potential loss there of, potentially millions or billions of dollars that could potentially drive them into debt.
Good. So they've got some asset market risk. They're probably invested in the stock market or other types of private, investments or public investments where, if that tanks, maybe it doesn't do a ton of damage, but the amount of damage that it could do is quite significant. Any other thoughts? Let's say wealthy or non-poor. Any other thoughts about risks some of those folks might face? So we talked specifically about like investment risk or asset risk.
I would say currency risk, although
Okay.
I think it still falls under market risk, but mainly for like the non-poor and investing internationally.
Okay. So folks have international investments, they might face some currency risk. That's one that I hadn't even thought of. So I really like that.
Yeah, it's only because I'm an international student that it kind of affects me sometimes with the extreme rate.
Got it. Yeah, no, that's a good one to point out. Other thoughts? Maybe we'll take one or 2 more because y'all are coming up with some interesting stuff here. 1 or 2 more on wealthy or non-poor. All right. If folks come up with if folks come up with something else, feel free to blurt it out. What about vulnerable non-poor? So folks that are kind of in that line where, an event could potentially mess them up for a little bit, but they're generally able to kind of meet the obligations they have. Maybe they don't have a ton of discretionary income, but what kind of risks might those folks face?
I think this is sort of the area where you get into the sort of blue collar jobs. So potential risks there, they're working probably some of the more dangerous jobs like in construction or, harvesting, things involving manual labor. So there's potential for injury or death, things of that nature. Also, job loss. If they lose their job, there might not be as many opportunities available to those people as there are for people in the upper class, in the upper middle class. So if they lose their job, that could be a detriment to them.
Good. So we've got job loss, and that's particularly important because in this market segment, folks may not have as much of a cushion, as much of a safety cushion or a safety net, and so it's really important for people to have jobs to keep cash flow moving. And then we also brought up some of these jobs may be the jobs that, folks that in this market segment may be working maybe a little bit more physical. And so you've got risk of injury or even perhaps death. Any other thoughts? Maybe one or two more if folks have got thoughts.
I'm not sure if it would apply to this situation, but probably just like property or maybe like renters in terms of just where these people would be living and the risk of losing that.
Good. No, that's so property rental, that's actually a significant risk that is often talked about in microinsurance literature, particularly with respect to folks who are, they might be, small shop owners. And so if they're renting a stall and the market that they're renting in, let's say floods, or let's say, there's some sort of storm, or let's say there's some sort of natural disaster or an accident that destroys that stall, then we get into those problems of these folks now lose an opportunity to make income while they have to go try to find a new stall or figure out a new way to make money and make up that shortfall for that cash flow interruption that they're going to be experiencing. And so that's good. Another example there that's often discussed in the microinsurance literature is livestock. And so when you're dealing with agricultural workers and folks that make their money through sort of small scale agriculture, call it subsistence plus, if you will. If there's a disease that goes through their livestock population, or if they've got crops that don't perform well because there's a drought or things like that, those are property type risks that people can run into. And so I think the purpose of that exercise was to really discuss, like, what are the types of things that we might be thinking about trying to protect against for those different market segments. And so some of those things look very different if you have a significant amount of wealth and significant safety nets and you're using sophisticated financial tools, versus if your economic situation is relatively it's all sort of transactional, but if the transactions are a bit more elementary, if that makes sense. So appreciate the insights shared there. We can, yep. So users of microinsurance. We kind of discussed the target market, or the demographic that's going to be kind of the target of microinsurance type products. So low to moderately low income. But financial vulnerability is kind of a key of who these types of products are targeting. Often folks that are informally or self-employed. So in a lot of developing markets, you have things like emerging pension systems. You've got, state-sponsored, some forms of state-sponsored healthcare financing, things like that. And so the segment that this is going to be looking towards is folks that may not have access to formal solutions. So maybe they don't formally bank, or maybe they're not sort of commonly using formal banking systems, but they may have sort of an informal savings group that they're a part of, or a collective that they're a part of for folks that do what they do. So maybe it's a shop owners collective, maybe it's a farmers collective, something like that. And so that's that sort of self-employed sort of segment. Mentioned the use of either informal financial tools or a combination of formal and informal financial tools. So, this is the keep cash under a mattress. This is the savings groups that people might be a part of, whether it's rotating savings or whether it's call it a group lending type of mechanism. These types of savings groups that are very common in places that aren't the United States, and that I've even seen used in the United States amongst various immigrant communities, which I've found fascinating, because until I talked to more people, I didn't know that people really did savings groups like that. But you'll talk to people and they'll be like, yeah, I collect $10,000 from 15 people every month and I make deposits, and this is how we run the group and this is the rules. And so it's really transferring, what they did back home and what worked back home to adapt to the needs of their community in the United States. so some of the proactive forms of risk management that users of microinsurance might use, we talked about savings groups, we talked about burial societies, but there's also sort of foregoing opportunity. So there's the opportunity cost of, since I feel like I might have this risk, since I feel like I'm vulnerable in this area, I may not take this risk that might otherwise get me a significant reward. So maybe it's purchasing additional livestock for your farm, or maybe it's purchasing, maybe you feel like, hey, I need to be able to send money back, to my hometown or whatever. So I can't purchase this additional space in my shop because, I need the income that I have now and I can't afford to put extra away or whatever it is. But some reactive methods of risk management might include the sale of productive assets to deal with abrupt or shock events. And then even thinking about removing children from school if you have school fees to pay. So these are ways people might react to, let's call them contingent events. And then often, folks that microinsurance or inclusive insurance products target, it's really targeting a segment of the population that many of whom haven't had positive experiences with financial services. And so you see a lot of emphasis from microinsurance providers that's, let's be as transparent as possible. Let's be as simple as possible. Let's use simple language. Let's use simple processes. Let's over explain. Let's find ways to pay claims, which is contrary to a lot of people's perception of insurance, frankly. And it's refreshing to think about that. And for me, it's been refreshing to think about, how do we apply those principles to broader segments of the market in the United States? Because there's a lot of folks that don't use the products that, companies like Principal or New York Life or whatever sell, but might be willing to, with a combination of alternative marketing or alternative delivery or things like that. And so it's always an interesting exercise for me to think, what are the things that might apply to a market like the United States? So we got into some of the comparison a little bit. And again, feel free to ask questions anytime. I'm going to try to wrap up relatively quickly. But product structures are relatively simple. And so, for example, in the life insurance market in the United States, you've got things like, charge structures for cost of insurance charges. You've got account values, cash values. For secondary guarantee products, you've got shadow accounts and no lapse guarantee provisions and lapse protection and all this stuff, right? In microinsurance and inclusive insurance generally, you don't typically have these things. It's pretty straightforward. You give me $5 a month, or you give me 200 naira a month, and we pay out this policy that's $1,000 if you die within the next 2 years, whatever the policy provision is, or 1 year. It's a very straightforward policy. For health insurance, a lot of the products actually are not, there's a deductible and you copay and all of that stuff. It's really, you go to the hospital, you incur an expense. Certain types of expenses have certain types of reimbursements. It's that simple. You spend a night in the hospital, we pay you $50 or whatever, some prearranged or preset reimbursement amount. And so it's very simple to understand. And it's set up in a way so that it makes it difficult for there to be confusion or to have to mediate things or to have to manage disputes and things like that. You see limited underwriting. I'm not going to go so far to say no underwriting, but the underwriting is very limited, if any, purely to just try to figure out, how do we get people registered and using policies. Typically, you see shorter coverage periods, and sometimes you see policy provisions that are designed to adapt to irregular income streams. And so you might get people that don't make the same, like, I know what I'm making every 2 weeks. That's a check. I know what the check is going to look like in my bank account. Cool. For a lot of folks that are in the microinsurance market, you take home what you sell. You take home what you deliver, whatever that is. And so you find products that kind of try to adapt to that type of income stream. With respect to delivery, we're trying to meet consumers at the point of transaction. So if it's when you're registering for units for your phone, how do we meet you there? If it's in a retail store environment, I've seen products that are sort of attached to a retail shopping experience. I've seen products that have been attached to utility companies. And so finding ways to meet customers where they're already transacting and through brands that they're already familiar with and that they trust, rather than coming in and saying like, hey, we're this insurance company, we're trying to offer you these insurance products. And so it's really finding partners that the market is already familiar with. And then consumer education is also a significant component. I was on a call today because I'm working on some product development with a microinsurance company in Ghana. And one of the things we talked about is how do we make what we're doing here, since we're making modifications, very clear to our customers, very clear to the buyers, so that there's no confusion about what's going on. And then claims validation. I think this is an interesting component because sometimes you're dealing with folks that may not have birth records, or hospital records might be incomplete. And so in earlier, I don't know how true this still is, but you've seen things where the way to validate someone's death might be to go to an elder in a town or an elder in a village and confirm that a person has died that way or something like that. And so I think that's a really interesting way to adapt to the cultural context. All right, so we'll skip this. Could we go to the next slide? I may come back to this if we got a little bit of time. So we've talked about briefly types of products, the life insurance stuff, relatively simple, straightforward. Some of it might be a pure sort of funeral expense product that might be through like what's called burial societies in some countries. That's a really common type of product in South Africa. Some of it might be something like an accidental death and disability product. For health insurance right now, we're seeing a lot of hospital cash, but particularly with the pandemic, there was this sort of emergence of combining some of these health insurance or hospital reimbursement products with telehealth. And so that's becoming much more common to say, how do we combine a telehealth experience or a telehealth provision where someone can call into a hotline of doctors, or someone can, has access to a set amount of doctor visits each year through this product. We're seeing a lot of those things, mobile health, telehealth, start to be attached to some health insurance policies. Property and livestock doesn't differ too much in concept from some of the products that we see here. And then agricultural products, so particularly index products, where it might be based on, did rainfall exceed a certain amount in this particular region, or did days of rain exceed a particular number in this particular region? Then we make a payout. If it didn't, then we don't make a payout. And so it's linked to, let's call it rather than your specific circumstance, it's linked to sort of a natural event, if you will. Some people like index products, some don't. I know some folks that kind of specialize in that. I know some folks that are not fans of index products, but I think it's an interesting way to try to get at some of the problems that we're seeing, especially as climate change becomes a much more significant issue for farmers in developing markets. So this is probably a little bit of an old map, but again, like the chart I was showing earlier, doesn't really, it's probably not changed too materially from 2016 when this last report was published. 2016 or 2015, I can't get my years straight, but largely, you can see that these products or these types of products are typically targeted at what's referred to as the global South, so Latin America, Africa, and Asia, particularly sub-Saharan Africa. Kenya is a pretty big market. Ghana and Nigeria are becoming, I would say Ghana more so than Nigeria. Nigeria has recently had some regulatory openness, and so that's opening that market up a little bit more. And then South Africa has reasonably high insurance penetration. And then we see, significant product headway, if you will, in Latin America as well. And so those are kind of where these types of products are focused, particularly in places where you don't have nearly as developed of a middle class as we do in the United States or Canada or the UK or countries like that. Next. Talked a little bit about distribution, so we'll skip this. Kind of characteristics of distribution. So talked about, the idea of meeting consumers where they're already transacting. And so to go with that, really what you're trying to do is figure out how do we get to a large segment of the population relatively easy and in a way that's relatively sticky. And so that's the piece about using brands and entities that consumers trust. So whether it's the telecom companies, whether it's the utility companies, if you can find ways to make them a valuable partner, then their customers now are potentially your customers. And so that's a way that microinsurance companies try to find scale relatively quickly. And then in terms of administering the products, probably less so now than it has been in the past, especially with the emergence of fintech and increased sort of technological capabilities of the microinsurance companies and intermediaries themselves. Historically, there's been a reliance on the infrastructure of the distribution partners, whether it's the telecom companies, the utilities companies, or things like that, to administer the products, record keep the products, be the face of the products, things like that. And some of that may still be used as well, particularly in terms of branding the products. And then multi-purpose transaction platform. So if you're paying your phone bill, if the insurance product's attached, how do we make that sort of a 2-for-1 type of transaction? And then, as mentioned, the distribution partner is usually a well-trusted brand with the consumer segment. We'll skip this. This is and I can have this deck emailed, but this is a piece that I wanted to particularly talk about in terms of actuarial capacity and kind of the opportunities for actuaries in the microinsurance space. So, some wise folks told me, hey, finish your exams before you get into this microinsurance stuff. I sort of listened, but didn't listen all the way, settled for stopping at my ASA. And to be honest, kind of pursuing opportunities that I found were uses of the skill sets that I had as an actuary, but also that I found to be more fulfilling. It's a sacrifice that I made. And I think in some ways it's helped my career. In some ways it hasn't helped my career at all. But I will say, a lot of the opportunities in microinsurance aren't necessarily like you graduate from college and now you can go be an actuary for like BEMA in this other country, because some of the issue is, you have to understand the cultural context of the market that you're working in. And so that takes time. But in addition, a lot of these companies, they're looking for folks that sort of have a sort of intuitive knowledge of how to do the actuarial work. And so I would say that's something that the early stages of my actuarial career taught me, especially being in a risk management and a modeling function, is how do I sort of fundamentally understand the economics of a product? And so most of the actuaries that I know working in microinsurance spent some time in sort of a traditional actuarial practice and sort of a traditional path before moving out and being able to apply that expertise in a place where it was really needed. But to that point, there's, and this is changing a bit as actuarial development and education is changing in some of the markets that microinsurance is becoming common in, particularly in the Kenyan market is one that I'm paying attention to. But in many developing markets, actuarial capacity is limited. And so oftentimes where it's focused is, where there are credentialed actuaries, it's focused on the more traditional market, the more traditional types of products that are sold in those markets. And so one of the significant opportunities is to be able to take the technical training that we all would have developed in the early stages of career and be able to adapt them to support local actuarial capabilities. And so maybe you get microinsurance entities that don't need a credentialed actuary, but they just need someone that sort of can become competent enough to do the work. That might be the sort of playbook for that might be written by someone who's working in a developed market, traditional actuarial practice, as a credentialed actuary that's collaborating with someone who understands the market, right? To sort of combine that cultural context with the economics of how you build a product, how you manage a product, things like that. And so, you know, what this could result in specific to the microinsurance market is, you know, development of practice notes, adaptations of practice notes, specifically geared towards microinsurance markets, right? So you might have, let's say in Kenya, it's called the Actuarial Society of Kenya. You might have the Actuarial Society of Kenya, but they may have, you know, with the help of actuaries who've been involved in microinsurance, they may develop practice notes that are specific to, or standards of practice that are specific to actuaries that are practicing in a microinsurance capacity. And so those are some of the opportunities, in addition to the consulting work that there's many actuaries doing now. Those are some of the opportunities that I would see moving forward. And as microinsurers potentially get bigger, some may take on some actuaries full time and say, hey, you know, we need 2 or 3 in-house actuaries. I know there's a company called Pula, which does agricultural insurance in East Africa. I think they've hired not just for, you know, high-level actuaries, but even, you know, early career actuaries. And so I think that's a shift that is starting to be seen as well. So do I have another slide after this? I think I may have 1 or 2. These are, oh, go ahead, go back. Yeah, so these are a few of the resources that I've used. Microinsurance Center at Milliman, they're kind of a preeminent resource, as is the Microinsurance Network. They're kind of an aggregator of microinsurance stakeholders. But those two are probably, to me, some of the most trusted resources in the inclusive insurance space. Actuaries Without Borders does some of the capacity and capability building work. And so I think they're an interesting organization that has been involved in some microinsurance type activity around capability building in previous years. The ILO has an impact insurance facility. They often have fellows, many of whom have been actuaries in the past that have worked on development of microinsurance markets. And then a book that came out in 2015, co-authored by Jeff Blacker, is an actuary, I think from Indiana, who's worked on microinsurance, I think since maybe the late 2000s, 2007, 2008. Had a chance to talk with him when I was getting a little bit deeper into my journey with inclusive insurance. I think that's just a really good, you know, book for understanding kind of the evolution of how actuaries have been involved in microinsurance. As at least it was for me, as I was sort of understanding where the industry was or where the sector was, as I was trying to more deeply engage. So that's what I've got for you all today. I've talked a lot. Please feel free to ask questions. I can also share my contact information in the chat as well. But are there any questions?
Yes, just one question that's been burning on my mind. First of all, thank you so much for your time, Mr. Coleman. This has really been, you know, very intriguing, and it's a pleasure to actually learn about something that's not talked about enough. I'm just curious though, you know, looking at the slide with, you know, different countries where microinsurance business is most prominent, you know, I see areas with larger populations like Brazil and India, you know, where, you know, typically millions or even sometimes billions of people live. And, you know, you see a lot more people that live in poverty in those areas. So I'm curious as to how, you know, insurance companies accumulate enough reserves in order to pay out, you know, policies for all those people, you know, in the event of some catastrophe that may occur in any of those places.
Yeah, that's a great question. So I will start off by saying I am not a cat risk expert. So my answer is probably going to be a little less technical there. I will say one of the issues that the microinsurance sector has been trying to sort of get its head around and deal with is the fact that there's actually relatively low claims ratio in many of the markets that you reference, or claims ratios in many of the markets that you've referenced. And so some of that goes back to consumer education, some of that goes back to product complexity. Like you'll have, let's say you have 100 people on a product that's embedded into some other consumer experience. Well, you might have 50 people that might not even know that they have that product. And so automatically that sort of depresses, your need to pay claims a little bit. The other thing as well, though, is typically these products are written by mainstream carriers or in partnership with mainstream carriers. And so let's say I'm going to use Beam as an example because that's a company that I've been working with, but they might have a product that's underwritten by, let's say, Axis or AXA, right? So AXA is going to be the paper for that product. AXA's actuaries are going to have priced that to sort of reflect, hey, what if this thing goes belly up? But the payout levels, the sort of individual payout levels are so small that when you're playing a scale game, unless you have a product that's really, geared towards addressing catastrophe risk, you can probably manage the risk on that product all right. Like the reserves for that type of a product may not look like what they look like for Principal's life insurance business, because instead of dealing with $1 million life insurance policies, we're now dealing with $1,000 life insurance policies, and we're dealing with them for 1 year. And so even like the way that you would calculate that reserve, or the reserve that you calculate, looks way different than it would for a longer tailed product.
Gotcha. Okay, that makes more sense. Thank you.
Other questions?
I'll ask a question.
Sure.
So, given microinsurance targets lower income consumers and the products are more on the simplistic side, how are these consumers encouraged to keep their policies in force for when time comes and they actually need to access the benefit for the policy?
Yep. Yeah, that's a good question. So I think part of that is, comes with that idea of trying to embed the customer experience into sort of an existing customer experience. But sometimes you'll see things, it's not uncommon to have like no claims bonuses or premium refunds or things like that, where, because insurance is a difficult concept for people to get their heads around. It's, hey, I'm going to pay you this money, and then like you might not pay me any money in the future, so I'm just going to have like paid you all this money for these years or whatever. But when you can keep the time frame relatively short, when you demonstrate the salience of paying the claims, again, like that's a mantra that I think is a little bit different. Not saying that in mainstream insurance, we don't have this sort of ethic of, hey, let's pay the claim, but there's a specific emphasis on, we need to be sure we're paying claims whenever we can to demonstrate the value of this. So some of it's demonstrating the value through payment of claims so that people can see, oh, the payout worked for my friend, or my friend got that payout when they made the claim. That embedded customer experience, and then things like no claims bonuses or premium refunds or things like that. The other thing as well is you might have, folks that they're not quite agents because they're maybe not necessarily selling the products, but let's say you're selling a product, you're trying to distribute a product to an agricultural collective. You might have folks that are sort of designated leaders of that agricultural collective, or maybe they're respected folks who are members of that collective, that are, their role with respect to the insurance product is to educate and encourage people to engage and things like that. And so finding stakeholders in the community that can continue to reinforce the value of the product also helps with persistency and utilization and things like that.
Thank you.
Great questions. I think we have actually reached the time, but I just want to make sure that we address all the questions. Any other questions from the folks? No. All right. Thank you so much, Nana. That was a really interesting topic. And I think David is right. Like, it's not often, shared, but serves so many countries around the world and so much more important segments. So I think that was really intriguing.
Yeah, thank you for having me.
So it is really great to see you all. Like I saw St. John students, Georgia State students, and Baruch students. It's been really nice to see all. And I think we should do this more often. Like I would like to do this more often, so it will make more of this more opportunity going forward. Just a quick announcement for Georgia State students. We'll have a final meeting April 23rd, 10 a.m. It will be our final wrap-up semester meeting, and we'll have some celebrations and award receptions. So I would like to make sure that everyone knows that this meeting is the last meeting of the semester and join. And that's pretty much it for today's meeting. Thank you, everybody.
Thanks, everyone.
Thank you so much, everyone.
Thank you. We'll see you.
Have a great day, everyone.